What is going on, Bulls and Bears? It is Friday, May 27th, 2022. I may not get a video out this weekend. It is a holiday weekend. I want to wish each and every one of you a happy holiday weekend. Hopefully, you have some more time off than usual. For those of you that are retired, I hope you enjoy your time off. You always have time off if you're retired, right? And hopefully, you're not retired and having to unretire and go back to work because of the cost of living. But let's get into another dose of economic reality. The consumer economy has hit another, I was going to say speed bump. It's more like a brick wall, not quite a brick wall, halfway between a speed bump and a brick wall. Let's take a look at what's happening with the typical average U.S. middle class consumer. And the consumer is the driver of the U.S. economy. For those that don't know, the U.S. economy is just about 70% consumer spending. So when you see debt skyrocket, when people are taking out mortgages and running up credit card debt, taking out car loans, student loans, etc., well, that makes the economy look better. And that creates service sector jobs and it makes the unemployment number low. But now the reverse is happening because they're running out of money, simply put. Let's take a look at the savings rate. It took another big plunge. And here is the chart. We have looked at this previously, and we reported it was between a 5 and 7 year low. Now the savings rate has plunged once again. Why? Because of the stagnant wages, the low incomes, the low Social Security payments for retirees compared to the cost of living. And we go all the way back now. This is the lowest since 2008. So all of the stimulus checks, all of the programs to help people, that money's gone. We see the big spike with all the stimulus checks and the forgiveness programs. But now the piper is demanding his pay. And people are paying the piper, and the piper is not done piping because this thing's just getting started. Now people are looking for price declines and corrections in markets. Stock market, pretty big correction we've seen thus far. Housing market, just a little bit. Our last report we talked about home prices are actually down year over year in Chicago. I think some other cities are going to follow suit, but overall, I do not see a plunge in housing coming or any sort of crash. But yes, the savings rate not looking so pretty. Mid 2008, that puts us at a about a 14-year low for savings. And this is at a level of about 4.4%. And what that is how much the average household has left over after non-discretionary spending. And that's what most people have to spend. So what does this all mean, folks? This means that we're headed towards a bankruptcy tsunami. And you probably heard me say this. I'm thinking at the end of the year, in the late second quarter, or the late second half of the year, not the second quarter, the late second half of the year here, 2022, we're going to see things hit a wall, not just a speed bump, but a wall. Consumers are getting tapped out. You see it in the levels of debt. Debt is skyrocketing, and of course that sounds like a broken record. Debt has been skyrocketing, but it's even going up faster now than before. Take a look at this chart here on credit card debt. And this is total revolving credit, which largely consists of credit card debt. Of course, we see the big drop during when things were shut down and payments were paused on so many things. People stopped traveling for the most part. Look to the current data set here as of April of this year. And look back, this goes all the way back to the early 80s. This is the biggest spike in total revolving credit, aka debt, that we've seen in about over 40 years. And that goes right along with the 40-year high inflation, right? No coincidence that people are spiking, taking on record levels of debt at the 40-year mark, the same as the rate of inflation, right? No coincidence there. And the really scary part about this is most people have no idea what's in store for them, and probably for most people. Most people live paycheck to paycheck. So when you see charts like this, this is not just a small segment of the population that are seeing themselves run up these levels of debt. This is most people. Now, there's some mixed feelings on this, mixed opinions. A lot of people look back at the last few years and they say, thank goodness for all those programs that helped people, all the checks that were sent out. Yes, they may have helped people temporarily, but was it a long-term fix? When you cheer those programs, yes, it feels good to get free money. It's good that people didn't get evicted, but if we don't fix the underlying problem of runaway cost of living, people are just going to get evicted down the road. You're just delaying the inevitable. You're just kicking the can down the road. So when you think about that, think about, is it a long-term solution or just a temporary fix? And ask yourself the question. It's just gonna be more evictions, more foreclosures, more bankruptcies down the road. Could they come out with more programs to help people? Absolutely. And people will cheer it and they'll say, yay, they care about us. But take a look at these, let's say the stimulus checks that were sent out in 2020, 2021. Those are just a fraction of now the increased cost of living that most of us are paying right now. I would rather have no stimulus checks and a cost of living that's not skyrocketing. And also people think, okay, the economic engineers, they're going to fix things, they're going to raise interest rates. Just like Joseph Stiglitz said a few reports ago, we talked about what he said, and he said that stated the obvious, Captain Obvious. Raising interest rates will not grow food. And also, this is very important. The Fed has came out and they've stated that they're not going to try to bring down the cost of living. They are going to allow the cost of living to continue to rise, although at a slower pace. Take a look at this article. This is an article out of Fortune. The Fed hits the housing market with another economic shock. It won't be the last. So they're mostly talking about rising mortgage rates here, the runoff of the balance sheet, which includes a massive amount of mortgage-backed securities. But that's not the most important part of this article, in my opinion. And this again points out what we've been talking about here. The Fed is not trying to stop inflation overall. If they were, they would raise interest rates much higher and much faster. And it spells it out for us right here. Fed Chair Jay Powell was crystal clear on Wednesday. The Federal Reserve had transitioned into a full-fledged inflation-fighting mode. Not really. Read the rest of the sentence here. The goal, Powell says, is to see the 8.5% inflation rate fall back to the Fed's 2% target rate. Now, when people hear fall back, they think, okay, cost of living is coming down. No. 2% just means that prices are going to continue to go up, just not as quick. And does anyone think that they're going to achieve what they're trying to achieve with everything that's happened so far? 2% has been the target inflation rate all along, and they've missed that by a mile, by about 400%. Does anyone think they're going to get it back down to 2%? Even if they did get it back down to 2%, that doesn't fix the problem. The cost of living is skyrocketing. Remember, in hyperinflation, prices never come back down. Now, we have the world's reserve currency, so the odds of hyperinflation happening here in the U.S. Are very low, in my opinion. We still have King Dollar, which is losing its dominance, but we still see, compared to other fiat currencies, we still see the dollar holding up very strong. But just because the dollar is strong compared to other fiat or digital currencies, it doesn't mean that it's going to hold its buying power. So continue to brace, buckle up, strap your seatbelts on, prepare. For those of you that look at this as bad news or dim news, look on the bright side. At least you're not in San Diego, where in California we have amongst the highest gas prices in the nation. San Diego, the highest electricity costs. Probably doing better than me. Peace, people.